Oh, hey, we're live. Hey, everyone, Shane Oglow here, Rogue Trader Academy, and welcome to Deribit Live, July 18th. Just readjusting my microphone and stuff. I've got a different setup. I set up a whole bunch of new monitors, but I don't have I realized I didn't have a component to connect them properly, so I've just kind of jury-rigged some stuff together, and today I'll be looking this way. But yeah, this is going to be an interesting episode. I think it's going to be more like a fireside chat. If I could have a really nice background, like a fireplace in the background, wouldn't that be nice? Maybe I'll do that for the winter, Christmas time. All right, good to see everyone. If you can hear me, please let me know. I assume you can, otherwise you'd be saying I've been sitting here with my mouth moving and no sound coming out. Hey, good to see you, Raphael, Jandrea, Vladimir. Good to see everyone coming in. Let's let some more people roll in. Here, let me actually just start the slides while I get ready. All right, thank you for letting me know. Hey, Nick, Johannes, great. So anyone new, we're just going to start off with a little bit of a rundown of an account that we started here for Deribit Live. We started off with about $5,000 or so, and it's a specific account called a synthetic miner account. And the point of that account is to generate more Bitcoin because we're long-term bullish. So we do a bit of a review of that. We do a bit of a review of the market, what's been happening during the past week. And then we just get into some discussion, commentary, and questions at the end. We usually have 5 or 10 minutes at the end. So if you have any questions, just drop them into the chat. And that is the format we like to stick to. What's this? Questions already from Vladimir. 54 to 70K range still there has been discussed. Yes. And I'm going to touch on that. I did actually a fair bit of trading the last week, which I have mixed feelings about, but whatever. We'll get to all that good stuff. So I think we got enough people rolling in now. We'll just go ahead and get started. Let me share my. Here we go. Got everything. So, and just in case you're wondering, this is crypto trading with the pros, but today it's just the pro because Richard's not with me. He's in Bangkok on business. So he said he'd try and join if he could, but I think he's got back-to-back meetings, so I don't expect him to join us. If he does, it'll be a surprise. So it's just trading with the pro today. Although it feels weird calling myself that. It's like when someone calls me sir. It's like, are you talking to me? Oh, geez. Oh, okay. All right. So the topic today, and I think this is really relevant, and I think that and I'm going to refer back to comments that I made last week and even the week before. And it's the case for a summer bull run. And I don't think that there's anything, any startling revelations here. I just think it kind of made logical sense despite all the news and, differing opinions out there. And I think that we've got some interesting things to talk about and maybe some interesting strategies to play on. So first off, I'm going to cover the synthetic miner account. Again, this is the account we started for you guys just to say, hey, you know what if we just mostly sell puts? No, we're not just selling puts, but that's sort of the basic strategy in order to accumulate more Bitcoin versus having to mine the darn stuff. So here's the results updated this morning, or updated maybe an hour or two ago. We started off with 0825. That was worth about 5,200 or so at the time when we bought at the end of February. So we're up, Bitcoin Cash is up, Bitcoin equity is up from last week too. And our mined Bitcoin, we're up 31%. So we've generated 31% on February 29th. I'm happy with that. It could have been much better, but you just never know. The market throws you curveballs, and Bitcoin's a bit of a notorious beast. Speaking of notorious beasts. Well, it's a beef too. On this day in history, Mein Kampf was published. And I was thinking about that. I get these little things show up on my screen every day, what's happening in history. And I think that we all have our own little Mein Kampf when it comes to trading crypto. It's like our own little wars we have. It's such a crazy, volatile beast. it's so much fun, but it's also so angering, frustrating. Although I think it's all the emotions mixed into one. All right, so starting cash, we start off USD cash 74.66, cash up 83.60. So that's not right. Starting USD cash was less. I'll have to fix that. So here's the one that a lot of people pay attention to. It's this USD annualized return. Now, when you annualize return, you're going to get big swings in that return. So last week we were at about 50%. We're up to 117% annualized. We first started, we were like 2,000% or something after a week or two, right? But you knew that number was going to come into a line eventually. And if you were just hodling, so you hodl, let's say you just bought Bitcoin the exact same day we did on the 29th of February, hey, you'd be up 6% on that holdings as of an hour ago. Last week you would have been minus 20%. Let's just quickly take a look at the graph here. This is the Bitcoin return. You can see this is the big temporary drawdown we took when the market puked, about 25%, and we've almost recovered the whole thing. We're certainly up above highs we had just before, but we're not back to all-time highs yet. A little disappointing for me because I actually thought we would be by now, but I'll explain that in a bit. And if we look at the USD return with the synthetic miner, it's nice, right back up to the trend line. Actually, where are we on the trend line with the not quite there, but the USD return is back up on the trend line, and the red line is just people hodling. So in every instance, we're outperforming the hodlers. So you got to be pretty happy with that. I don't know how many people actually follow our trades or try and emulate them, but welcome to you if you want. This is not financial advice. I have no idea what I'm doing. Just follow along for some fun. All right. I usually have an idea what I'm doing here. Let me share my screen with you here. And this should be trading view charts. Yep. Okay, we got it. All right. So let's take a look. This is Ethereum. It actually plays into the narrative of this summertime bull run. That's the theme here. And everybody knows that the ETFs are going to be launched. It's imminent this week. I think that I've even got an article I'll link to here in a minute. Really nice recovery. I mean, down on its lows when everything was tanking, went down below 3,000, got really close to 2,800, and it's moved up really, really quite nicely. I mean, off its lows, it's already up, 23%. People think that ETH is going to outperform Bitcoin in terms of the whole ETF launch. They think that it's going to have more traction, will have bigger gains as a percentage versus what Bitcoin did. I wouldn't be surprised. I don't really have an opinion either way, but everybody expects, ETH to be above, 5,000 by the end of the year, something like that. We were on the Crypto Banter show a couple weeks ago, and Rand, the host, had bought some Bitcoin options the last time we were on the show, and I think he made 400%. And during the last show, he bought, I think, ETH options. Maybe they were 3,000 or 3,100, or I don't remember the price, but I don't think he's alone. I think a lot of people think this is just going to keep going up and up and up. So let's take a look at Bitcoin. And let's talk a little bit about what happened here. So, from tip to tail, that was about, 25% or so drawdown. It was tough. And this big move down here was coincide with that big spike down on our profit charts that I just showed you. But all we need is a sideways market fund. We suck all that premium back, and you can see we're back up. Actually, what screwed us up is it recovered too fast. And, that happens, right? And if you recall, if you were on last week's episode or the week before, we were down here, and I said, what I think is likely is we're just going to hold a range between, 55 and 60. We might just bounce around there for a while. And then I think we're probably going to grind our way back up in the 60s. Now, in the 60s in August, in a week, in a 2 week, I don't know, but I expected that to happen. I didn't really expect it to drop down. Anything's possible. It's Bitcoin, right? But, you always get these clowns out there who are, I shouldn't call them clowns. Yeah, it's clickbait. They're just trying to get views. They're saying, Bitcoin, 25,000 or 35,000, according to some study indicators or whatever. there's just too much. That would be pretty unlikely. It would have to have a major catalyst for that. What I didn't expect, I expected just kind of a, do something reasonable. Damn it, just be damn reasonable. Why can't you be, reasonable? But no, it's Bitcoin. I expected something like that, but of course that didn't happen. It decided to just go. Oh, hey, you want to go up? Yeah, there we go. Thank you very much. All right, fine. Now, I did get some nice long scalps and perps off here, but I unload them 60, 61. I didn't think we are going to go to 65 that quick. But that's besides the point. What's disappointing for me, and, this has happened before, and it's going to happen again, and I'm sure many of you have gone through this, is you're right in your opinion, but you didn't make a lot of money off of it. Now, the discretionary accounts that you can follow in our in live trading at Rogue Trader Academy, I'll post discretionary accounts. So the accounts just, maybe I've got a call spread or a butterfly on or whatever every now and then. I'm just trading mostly on price action. I'm not looking at the metrics too much. The synth miner, the dirty bird, the other strategies we have going on, we're looking more at the metrics. This is just a pure trading strategy where I'm putting those in the live alerts. So I felt it was going up. So what did I do? Here, let me see if I can do the whiteboard here. Is this on? Turn whiteboard on. Yes, that should be working. I should be having this. Do you see this? Probably see that. I think I need to change the color here. Let me clear that. Yeah. I'm going to go to white. So I got a black background. So, as we were moving up, back in, the 15th started going up. Well, I was selling calls, right? And I was also selling calls as a protective hedge in case we did go down. Who knows? Maybe we would have went down to 50 or 51 or 52. I don't know, right? So I want to earn premium because I had short in the money puts. So I'm selling some calls. I wasn't selling them heavy, but enough so at least I was earning some income to help offset the loss from the puts. And, it starts moving up. I sell and I sell and I sell. And I've sold up here. And of course, then what happens? You have to roll. I'm rolling one to another, to another, to another. And there's nothing wrong with that. But when it happens faster than you expect, well, you just have to have that time to catch up. So my account is practically, my account, I can't see that other account. I think it's almost exactly the same as it was when it was sitting here before the dump as backup. So I didn't lose anything, but very disappointingly, I didn't make anything. Now, I still have these short calls that I'm managing and working. Now, some I moved out into strangles. Some I've moved up further in time and further in price. Some are just, I keep them at the same strike price, but just buy myself a bit more time and collect a lot of premium for doing that. So it ends up that if the market really just flattens out, it just does, this for a while, poof, all that premium just comes in, and it's a gorgeous, beautiful thing. And that's, of course, what, option sellers typically want. You want this nice slow move. So you get lots of time to move things. The volatility doesn't spike too much, but it's Bitcoin. So you know what's going to burn you from time to time. What did I want to say about that? Yeah. So I still got a lot of stuff cooking here, a lot of short calls up in this area. I've got some in the money calls. I've got some in the money puts, but they're bleeding fast, and I'm quite happy with that. And I think that's just going to be the strategy going forward. I don't think that we should necessarily expect hard spikes sideways during the summer. During the summer, I think we're going to do more of a gradual, nice move. And let's get into that whole theme. There might have been something else I want to talk about with trading on this chart, but I don't recall off the top of my head. I do expect now a little bit of a pullback. I wouldn't be surprised if we saw 61, 62. Just my personal opinion. We may not. We might just go sideways for a while and then move up to 68 or something. I have no idea. But that's kind of my personal opinion. So holy cow, that's bright. It's like blasting me in the face here. Hey, let me make this bigger. This is the ETF Bitcoin inflows. And look, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 days straight of inflows. Now, yesterday's wasn't huge. The day before was pretty sizable. A little bit going up from grayscale and bid. Okay, fine. But some days we're green across the board, like even some days, even grayscale, right? So this along with the spot ETH ETF, this is sort of the case. I'm just going to put a different screen on because it's so bright in my eyes. It goes back to this idea of the bull summer run. And what makes this different from, say, Tesla or the S&P or some of the traditional finance things where you think, hey, you know what, I'm long-term bullish on this asset, but I don't want to get caught in the summer mud, because nothing happens. It's different. Bitcoin trades 24/7. Yes, Wall Street goes on holiday, but they got the junior guys working again, They've got people around the clock. The ETF inflows aren't going to stop. So my question is, and maybe you guys know better than I do. Oh, and just after I get through this, I'm going to pull a poll up here. Actually, I'm going to publish the poll right now, and you can take a look at it, and I'll talk about it in just a second. My question is where's the selling pressure going to come from? Okay, the Mt. Gox, the German thing, been priced in. They're out of Bitcoin. Like, we had a bit of a knee-jerk reaction to all that. And this down here, how come I don't see what? Oh, there it is. Here's my mouse. We've got this knee-jerk reaction, but that's all it was. That's all it was. And if we want to draw, on the technical side, we could say, okay, well, this was the very bottom because this bottom was put in, way back at the end of April when it scared the bejesus out of people. We did the same thing. We wicked through and back down, wicked through and back down. Now, technically speaking, people will say, well, hey, you know what? If it closes below, the support area, then the signal is disqualified. Well, I don't know. It's Bitcoin. Bitcoin's loose and sloppy. Some people like it loose and sloppy when they're eating burritos. That's just the way. Technical analysis is just a general guideline for us to follow. If you put your stop exactly right below here, well, guess what? You're asking to get your stop hit. You've got to it's got to have looser tolerances. It's like an AK-47, right? If you know about rifles, it's got loose tolerances. You put it in the water, you hold it up, all the water drains out, and you keep shooting. Other weapons don't do that because they're finely tuned. They're finely machined. Everything's tight fitting. Get dirt in there, it's a real problem. Dirt doesn't matter to an AK-47. So Bitcoin's the market version of the AK-47. And just so you guys all know, I just coined that. It just came to my head. I'm going to have to run with that. The point is we've kind of made this new bottom. We've clearly come off of it. What's going to stop it from going up? I don't think anything. I think we're just going to keep grinding up. Yes, we're going to have days we can pull down, and that's wonderful. That's wonderful for selling put spreads or for whatever, getting out of one side of our iron condors or whatever we've got it on. But the difference between TradFi and this is TradFi usually won't get a good trending market during the summer because everyone's on holidays. It'll just go up and down, up and down, and up and down, and just fart around sideways and just frustrate you. Here's the thing. A lot of people are saying, you know what? I'm going to wait until the end of September or October, because I think by the end of the year, next spring, this thing's going to be at 100 grand or 150 or whatever that number is in their head. Okay. But what if during the summer we make a 20% gain? You want to give up 20% profits? I don't. From right here, if we just kind of grind, next thing you know, hey, we're at new highs. That's 20%. If we go up to 77, maybe we'll be up here in October. You're willing to give up 30%? I'm not. No, I'm not saying to get in now. Of course, you can if you want. You can use options. We can buy a longer dated option and do a synthetic covered call, right? We could buy, next March or June or December, or whatever you want. And we could sell shorter dated against it so it ends up being free for us. That way, if it doesn't go, and you're right, this damn thing doesn't move until October, well, at least you've recovered a lot of that cost, right? Or you could sell puts against it, do it like a risk reversal. That's fine. So that's kind of my rant and my point about this is we've got all this ETF stuff. The news that came out that was supposed to be disappointing was discounted. I don't see what's going to stop it from grinding up. 24/7 market. Not everyone's on holidays around the world. TradFi rules don't apply anymore. And that's what I was thinking in the spring going into this. I thought, oh yeah, the summer will be dead. It'll be like last summer. But no, it's not like last summer. We're in a different world. We're in a different price range. You've got different parameters, different news, different governments doing different things. We've got it's such a different picture now. So that's my reasoning for thinking, you know what, there's a good chance we could be grinding up. And I think that the way to play that is just to, wait for a little bit unreasonable moves. The market gets a little bit overextended. I'm happy to sell the other side of that. If you're an absolute enthusiast and thinking, no, it's going to go, well, every time it takes a dip, let's sell some puts. And we can use that to buy calls if you want. If you want to get a bit more aggressive, that's a risk averse, right? Holding on to perps might not be a good idea. The funding rate might stay positive, might kind of hurt, might wipe you out. But if you want to go long futures, buy some dated futures. So that's kind of where we're at with that. Now, what did I want to show you? Oh, I wanted to show you the liquidation levels too. Now, one of our members, Nick, I think he's actually on the call. He was showing me this a while back, and I like to reference it every now and then. I don't look at it every day. Just every now and then. It's interesting to see how this changes, so you can update it. It's probably lagging information. Don't treat it as gospel. But last week, we had one side was fairly steep, the side was quite shallow, and I was surprised today to see it fairly steep on each side. And the steepness on each side just means that there's a bit more risk on each side there. And this just shows you people's leveraged positions, right? So if we were to push up, past 66, there'd be a lot of liquidations. If we're going down below sort of 63, there'd be a lot of liquidations. So this isn't heavy trading in this market, but it's something I like to keep an eye on. And the reason I brought this up, it's not like reading the magic 8 ball. I was just curious. It was curious to me that the gap closed and we kind of got steep on each side, when I feel like right now, there's no reason to be. Maybe people are putting risk on because the vols are higher and it's a good time. And I could understand that, because if you think about it, we're at, let me expand this out. This is the synthetic miner account. D-vol's at 56. Oh, I had no idea it was so high right now. Let's take a look. It popped up a bit. Yep, popped up a bit. Look. Okay. Oh, no, sorry. I was thinking 60. Sorry. I was confused. I was looking at the other, like yesterday, and it was up at 60. So we're at mid-50s, which isn't bad in the summer. Last summer, we're in the 30s and 40s, right? So on those spikes of volatility, people generally want to sell vol. And I think that's an absolutely fine thing to do. I'm kind of running a little bit low on time here. And the poll question, in case anyone hasn't seen it, is, do you think we're going to have a continued strength and new highs this summer? So far, the yeses are beating the no's. Quick look at the synth miner account, then we'll jump to a few questions. And reminder, Richard's not on the call with us. He's the super technical nerd. He likes to automate everything and write codes and scripts and stuff. I just trade. I just trade. That's it, man. So you want to ask me trading questions? Let's do it. What we got in the synth miner? Oh man, a lot of our stuff went out. We don't actually have a lot left. I got 0.2 short calls here, which are basically, at the money-ish. Those expire tomorrow. We'll see what happens. I've got orders in to cover these. If we get down to 64, of course, those will collapse fast. Then all we've got is something out in the 26. Got some short calls at 61, some 64s. It's still got a fair bit of intrinsic value in these $529 of extrinsic value in these short 61,000 calls. And I've got some short puts at 64. Perfectly happy to sit on this. The only thing I didn't like is when I moved this was part of a rollout. I didn't like to have my cover so far away. I like to have that covered a little bit closer. But in order to make the numbers work and to keep it short dated, I had to go to that. But whatever, that's fine. And I'll keep rolling these and rolling these and rolling these. If the market moves up, I'll strangle some out. Not a problem. Not a problem. That's all we got going on the synth miner account. Not too exciting stuff. Not a lot to talk about. It's not exciting, just not a lot to talk about because a lot of the positions were taken out this week. So let me end the poll here, right here. You guys can see the results, 71% that we're going to have new highs end of the summer. I kind of think so. If not new highs, I wouldn't be surprised if we took a run at 70, 72 again. It would not shock me at all. It might not happen until August, but it would not shock me in the least. I don't think we're going to go down below 55 again. And if we take a big drop, let's say tomorrow we take a big drop, we're down at 58, I'll be selling puts like a mofo. And I'll be picking up futures long for scalps as my usual modus operandi. Okay, let me go to the chat. We got here, yeah. Vladimir, still not back to all-time highs because vol spiked. It was 40%. Now 60%. Yeah. Well, a little not now, but yeah, you're right. Vol did spike, but I don't know. I think that that's sort of like one of those self-fulfilling prophecies too. As it moves up, people are forced to scramble and cover, and it forces things higher, and away we go. Right? The options market they tend to make things a bit more volatile. Core have loading longs last week. 45 D vol. Okay, cool. I believe they're going to go up on the next 6 months. You bought 45 vol, and you're looking for vol to, well, vol's already increased. In fact, I was looking 2 days ago, and I mentioned this to our members at Rogue Trader Academy on our Discord channel, that December 100K calls so this December, like 5-6 months away. 5 months away, doubled in price in 3 days. I couldn't believe it. Because I thought, you know what, maybe I should pick up some 100K calls. I think because I had some 200s. I had some stuff I'd bought ages ago, and I looked at the price. I thought, oh, okay. I scrolled back down, the market day, the time and sales. It literally 3 days below was half the price. Moving from 58 to 64, doubled the price of December, 5 months in the future, 100K calls. I thought that was quite interesting. And just for an interesting bit of reference here, let's just take a look at the volatility surface, because I haven't done that today. I can make this a little bit bigger. Pretty flat. But volatility, this looks about the same as it did yesterday. We're used to Bitcoin and crypto being, optimistic in the future. Everybody thinks it's going up, but if you want to sell vols, if you want to get good vol, you've got to go out in time. But it's a decent looking curve right now. I think I'm pretty happy with that. What else we got here? Q&As. Let me get to a few of these. We're almost out of time. We're right out of time. Question from Johannes. You seem to always buy back at 0.00. Well, add one more zero in there, 5 basis points, not 50 basis points. What's my reasoning for that? You're going to laugh when I tell you. Number one, there's no real reason. Number two, it's an odd number. I count numbers in my head. I never stop. I never stop is 10 letters. I count instantly how many letters are in every word. I know exactly how many letters are in almost any word in the English lexicon. And I'm always adding up sentences. And most days I try and manipulate the variable to come out as an odd number. I know it sounds weird. I'm not Hannibal Lecter. It's just some weird OCD thing I got going on. I've met other people in my life who kind of do this too. For some reason, I like odd numbers. And I usually just choose 5 basis points because it seems cheap. Now, sometimes I'll put one in at 7, or even, God forbid, an even number at 6. I'm joking. But just 5, 10 seems too expensive. If I'm selling short dated stuff, 10 seems like too much. If I'm selling for 30, 40, 50, 70 basis points, it feels like taking 10 is too expensive, because you got to remember I'm including cover. Oh, that's what I wanted to talk about with this chart, and I'm going to go back to that in a second. Let me go here. I've just got a minute or two. So it's just me wanting to to get out without having to pay a lot. But if I was, because some people might say, well, hey, Shane, you're so close. Why don't you just let those expire worthlessly? Because I've been burned too many times where I should have closed something off and it went quickly against me. I'd rather just take it out, pay the commission, and have the peace of mind, take the risk off the table. Doing it for 2 or 3, it's like, okay, it's nothing. So 5 just seems to be this happy little medium. Now, if I'm trading longer dated options, I sold something for 200 basis points or something, I'll put my orders in, to buy some back at 30 basis points and a little bit at 18 and a little bit down at 11 and a little bit down at 5. Like I'll stagger out that way. What I was going to say, when I was talking about, we were down here and I was selling some calls, sold some calls, sold some calls. And then I had to manage a lot of these. Don't forget, with calls, normally I'm doubling my cover. So if I had to move this call from here to here, I like to do it on the same expiry so I don't have to wait anymore. But in order to do that, you have to double your risk or maybe triple your risk, depending on the strikes and how far in the money you are. So let's say I take this, and now I've got basically, the price is going up to here, and I take this and now I've got 2 short there. That means I'd have to buy more cover. No, it doesn't. Because on this first one down here, I bought double coverage up at this area, right? So I'm moving into cover that's 1-to-1. The other thing I do, and everyone knows this, on this big move down, what's one of the things I was doing? I was buying cheap calls. Cheap calls. So I already had cover in place. Hey, what did I do when the price moved up here? I'm buying cheap puts. Now, the puts aren't as cheap because the vol spiked, but they're still relatively cheap. So I've got a little bit lighter on that because I don't know. Maybe the stupid thing's going to come down again. Maybe we're going to be down at 60,000 again. I don't know. But I like to be able to take advantage of that and have cover in place. I don't know. I hope that makes sense. My hokey drawing. I just wanted to mention that. Yeah, it makes it so much easier to roll. It's so much easier to roll, and because you're not having to make up very much of that value. Half or 3/4 of the value is already made up by the long calls that are in the money or close to the money, or just gone up in value because volatility has increased, or it just the price action has made it better. It's just so much easier. Yeah, that's all I can say about that. Any last questions? I went a little bit over time. Again, Richard does send his regards. I spoke to him last night. He didn't think he could make it. He was a little disappointed, but he was tied up in meetings. But if there's no more questions, let's leave it at this. Let's see what next week brings. I've got a funny feeling we might be up here. Yeah, we could be up, 68 to 70. I think there's probably just as good a chance we'll be down around 61, 62, something like that. But if we can just go sideways for a while, that'll be beautiful because I can pull in all the premium from tomorrow and next Friday, and I can sell some new risk. And I'll just look on the discretionary accounts. I'll probably hold off selling. I might sell some light iron condors. We'll see, especially now the vol's high, because we could have the vol collapse. We could be down at 35. If nothing happens for a week or two, it's going to suck in, right? But I don't know if we're going to have that same phenomenon as we had last year because of the reasons we talked about, our case for a summer bull run. So what I'm going to do with the discretionary accounts is if we get any stupid moves down, I'll be selling on the other side of it and looking to take it long with perpetuals or dated futures, maybe long calls and puts. We'll see. It just depends on the price at the time and the vol. But I'm happy to do that. Same thing if we push up to 70,000. You bet I'll be selling call spreads up above there for sure. Could it go through and smash me? That's fine. I'll roll them out into strangles. I don't care. Or I'll just keep pushing up. I don't expect us to just go one way and just not stop and just go pounding up. I don't expect that during the summer now. The market has proven me wrong before, but that's sort of where I want to leave things at. So everyone, hey, thanks so much for joining me. I think that's it for today. Any last questions? Nope, no last questions. We'll see you again next week. Hopefully Richard will be with us. Until then, take care and happy trading.